All right, ladies and gentlemen, I hope you had a wonderful weekend. It's already been a crazy month for the markets, and that's not going to change this week as we get Jerome Powell, jobs data, and even more earnings. And after last week, investors are all over the place. We finally saw the economic data move, and then you saw volatility come and go, and one of the biggest rallies since November, and because of the data and volatility, a lot of people missed out on that. So this week is going to pack a punch. We have a ton of big companies, the Apples and Amazons of the world, but you got the central bank, you got big data. There is a lot at play, and we really got to talk about the bonds, and we're even going to talk about the yen today. We got a lot on this watch list. So Chad, I hope you're locked and loaded. I hope you're ready. I have the plays. I have the keys in the breakdown. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. And before we do anything, don't let me get ahead of myself. I'm actually glad. Look at this. This is the random account. And yeah, now that we have some history we have a chart now. So I'm proud of you guys. You did good. Beginning of this year, you have grown the random account. And what this means is that on these Monday watch lists, the Chad who's listening now, they have posted a random option trade. And you can do that right now. Keep it below $100. Post a random strike expiration, all that good stuff. Tomorrow morning, we're going to do a random comment picker and see where it takes us. But look, it grew. Let's go, baby. So let's keep it up now. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, like I told you, Powell, jobs and earnings. That's the main gist of this week, but said simply, what you're looking for is Jerome Powell might be more hawkish because of all the data we've been getting. The jobs are expected to come in at that low 190, even though they've been rocketing up all year. But remember the data recently, it has been showing that jobs number and even wages moving, so that will be important. And then finally for earnings, Apple, Amazon, AMD, we are going to get the next batch or the other 20 or 30% of the S&P 500. Keep that in mind. After last week, you have now had 40% of the S&P 500 already report. So that's the first thing you guys got to watch out for, but this was something that I was bringing up here at the beginning of the video. And don't forget what happened last week, because it really got people moving around. Not only do you have bond yields and all of that stuff with 5% or even 4.75. We're going to talk a lot about bonds here, but don't forget what you had. You had stagflation data. It got people worried. And then on top of that, the sheer momentum and movement that left a lot of people on the sidelines here. So coming into this earnings, there's still a lot of tension and a lot of movement from last week that's going to carry over. And that's why now too, Powell and the jobs, we want to see, is there any sort of story or narrative that gets carried on from what we saw last week? And if it is, that's not going to be good. If Powell follows what he did last time and starts to set a trajectory of being more hawkish, we're not going to like that. If the jobs data starts moving like the recent data and we start seeing more negative signals that starts bringing up stagflation and all these things, then we're going to have a pretty bumpy summer or start to it. But at the same time, we talked about this last week. We were talking about a rally on this last week watch list. Don't forget, if things do play out good, the market is going to love all of it. So that is key number one. The second key now, and this is where we got to speak a little broad because we have a lot going on here. And lately, the funny part was that last week, believe it or not, had the most event risk. So we'll see how volatile everything is moving forward. We do have a lot of events, but with all these big events happening, it's like sometimes it feels like the market's going to make a big move, and it's easy to be underwhelmed or disappointed. And then it's like, wait, why is this doing that and this and that? And pretty much what I'm talking about there's something way bigger happening right now, Chattadonia, and I think this is a good time to talk about it. What I'm even having up here, this is even a quote from Bank of America, and it makes sense. There is a weird equity and bond relationship right now, and we're watching all these weird things, and I do think, and why I'm bringing this up, because I do think as this week culminates, Jerome Powell, the earnings, jobs data, even leading into CPI, if it's good or bad, the answer we're looking for right now is 5% on the bonds. And what I mean by that is like that will be your next inflection point. You will watch the market move just kind of like we did at 4 or 5, but this will be a lot bigger. But then at the same time, what I want to kind of draw attention to is the fact that why does the market feel like it's in la-la land? Even then, it's been 4 months. The data hasn't been favorable. Even if we've priced out rate cuts, the whole entire market is up. You're hitting rallies. Even some places like Japan, that's another story. They're going up too, but like why? So the answer is fiscal excess. And right now, the theme, and this is something I wanted to bring to your attention because by the end of earnings and the data, it's either going to solidify this or not. But the theme is ABB, and that is anything but bonds. And that is what categorizes the market right now. And the reason being, there is a fiscal excess. This is a true statistic. This is from Bank of America. They say if you spend $100 every second of every day for the last 1,966 years, you would have spent how much we have had in the last 12 months. And pretty much what they're saying is that the way we're spending and the deficit, regardless, yes, it will bring the data and inflation back, and we might have to see, but in general, this is the no landing. This is why you do have things kind of holding up. There is a way, way bigger force here. And why is this so key? Like, why does this relate to this week? This all ties back into the bonds now and going to 5%. The thing about this week or even last week is that we never really even got to 4.75. So it's like, why are we bringing this up now? Because one, that's been the theme and the momentum and trajectory for bonds as of lately, mixed in with the data and all that. But just like last time, anytime you start getting above 4.75, that's where it starts to go nuts. And that will be the next level where the market starts moving around. But I wanted to bring this to your attention because we will get a lot of answers. Maybe the volatility goes away. Maybe it comes back, and that's going to be through everything this week. But on these days where I'm like, hey, if you can't explain a random sell-off, look at the bonds. This no landing narrative, I think it's something bigger, and don't underestimate the market to be able to float up on that until there is a real big material change. So watch out for that. That is key number 2. And then finally, key number 3, man, the beautiful thing about this week, there is a lot of broad winds that should be able to move us. You're actually going to get information that could potentially move and change the narrative. The earnings could give us stuff about the chips. It's going to let us know whether or not the AI stuff and the tech, if they're holding up, and all that stuff is good, especially after we freaked out. Powell is expected to adjust his speech a little bit more hawkish. We'll see how far he wants to take that. And then once again, we're going to get data. And just like I showed you with some of the CPI stuff, remember, we are running out of runway, not only for the end of the year, but also for the election. And that's why where all the data starts to fall in, if you take this year's average of how things moving, it starts to set a path for all of that. So we'll see how this all culminates. It's going to be exciting. There's going to be a lot of plays. I hope you're ready for all of it. But now, let us get into the plays. So, right off the bat, I got a couple of different plays, a couple of earnings, and we were talking about it last week about doing a lot of the pre-earnings plays, and I want to do that, but this first play, I'm starting off in left field, I guess, but MO. So this one, Altria, one for the long term, and actually we will be getting a long-term deposit this week, but the thing I like about MO, they got news on Friday that the Biden administration is looking to walk back that ban on menthol cigarettes. It was a big deal. They just said, and this is why the stock kind of had a pop and drop, that they were discussing it. There's no like formal actions as of yet, but they did confirm that they wanted to go back on it, but essentially getting rid of the menthol ban. And I was bringing this up at the moment they brought up the menthol ban a few years ago. I mean, the stock was at $50. Ever since there, it hasn't been there. So I got really, really hyped on this news, but it may not be as easy as I think it'll be, simply because you got to deal with the back and forth there with the election and hearing what they're actually going to be doing, or if it's just, well, we're going to walk it back and then maybe it's still on the table. So as far as that playing the plays, I went with two different sets. I went with one for this week or next week at the time. I grabbed a May 3rd $45 call. I grabbed 20 of them for 14 cents, and then I grabbed the May 17th 45 calls when they came down. This was my average, another 25 of those at 17 cents. So down 13% on those. The ones with a little less time, those went down 50. But like I'm saying here, if it is going to be easy, I think there'll be a good reaction. I think analysts are going to have to adjust to this, and people will start talking favorably if this could be an unexpected tailwind. A lot of people were saying sell the news to this news, but I was saying on Friday, I don't think anybody expected this, so it's not like there was like an anticipation sell that you could get into. So we'll see how that one plays out. That is play number one. Then play number two, Apple, man. This is my pre-earnings. I went with those pre-earnings on Friday for the good earnings. They went up for a little bit, and then Apple sold off. So it's kind of in that pre-earnings move, and there's still a little bit of time you could take advantage till they report next week, but there is a lot riding on their earnings. Everything from China and the iPhone to 3-4 quarters in a row of slowing down. The Apple Vision even has had a little bit time to get some info on that. They got a lot of things, and not to mention, I think they're down about 20% from their all-time highs. So it's one of the biggest decliners out of any of the big dogs. We'll see how they play with earnings. I don't know if I'm going to make a play to hold for earnings, but they have a lot of value. But I do think pre-earnings and just how this is going to dictate the market this week, that will be very important. So watch out for that one. That is play number two. And then finally, play number three, bro, the yen. Yes, and I mean, maybe you're surprised, or you shouldn't be, why we're bringing this up, because last week was insane, and right now, man, it's failing. There's no way to put it. I don't know if you guys remember. My only regret is that when I told you this, I should have just sold my long-term yen. But at the end of the day, it was a couple of weeks ago when they first did the rates, and we were talking policy failure. Well, yeah, that's what's happening. The yen is just absolutely dying. I mean, it is affecting your dollar and making that strong, but the real issue now is that it's like getting out of hand. It's leaving the best of the best even scratching their heads right now in a weird way. It's like the Bank of Japan kind of giving up in the way it works at this point. And this is just a theory. I could be wrong here, but people have talked about this. I think Deutsche Bank as well. It's very simple moving forward. It's just like it's already got to that point of policy failure and continued weakening. And now it's just like you're going to get one big major, huge weakening down, flush everything out, and then that should be the bottom, and then that'll categorize the policy failure, and then everyone steps in and it goes there. But the way you should be looking at it at this point, policy failure and that just trap door, let it have the death blow, flush out, and then from there we reset. But it's big, and just like last week, I mean, the more this thing weakens, it's hard to ignore. At sometimes it's like in the same situation and following that story, but if we do get to that, I mean, we haven't had a currency failure on a big country in a while, or at least somebody more developed. It's been in other places, so we'll see what happens with that, but keep your eyes on that. That is play number three. As far as everything else, I didn't make any other like gold or oil plays. I would definitely keep an eye on oil this week. And then over the weekend, there were just a lot of different headlines. I mean, Tesla had a surprise visit to China, met with Premier Li, and that was unexpected. Remember, he just canceled the Indian one too, and Tesla did good a little bit too leading into that last week. So watch out for them. I will keep an eye. And then there, believe it or not, was another regional bank. It was like Philly, Bank of Republic Philly. They got put into receivership, and the FDIC took them over. They had like $6 billion in deposits or assets. It wasn't as big as SVB, but still pretty large. So we'll see how that plays in. But sadly, I do think everybody will be focused on earnings, the data, and Powell and all that. And thankfully, tomorrow will be a little slower, but by Tuesday, it should start to go crazy and get active. And then we see where it leads us. But Chad, That is your watch list, ladies and gentlemen. Make sure Hydrate Healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you don't start something until you plan out the end, baby. Everything that begins has an end, so always keep that in mind. But Chad, I love you. Drink that water. Stay hydrated and healthy. Have a great rest, and I will see you to start off the Monday, baby. Horn.